What's good, everybody? Hope you guys are doing good. So we are back today for another video, and today it was another crazy day in the market. It was a third day in a row that we had a stock correction. Absolutely crazy. I was watching it the whole day, and it was like watching a movie. I'm going to give you guys a breakdown in case you guys aren't aware of what went down. But before we begin, this is my official Twitter page. Yes, if you guys are not already following me on Twitter, what are you waiting for? Just click the follow. It's quick, it's easy, and you'll be able to send me messages and see what I'm up to. And when I get my dividend payments, stock news, I post it here. This is the best way to get in contact with me. Right now, we just passed 400 followers. We're at 401 followers. Thank you for everybody that's been following and been supportive, all that good stuff. The community on Twitter, very positive, very helpful, a lot of nice folks. So what are you waiting for? Go ahead and follow the fun. All right, let's begin. Alright, so let's start with the Dow today. What happened? It was down 2.25% or 632 points, which is pretty insane. Now, if we go to the past 5 days, right here on, today is the 8th, minus 3, that's going to be on the 5th, so right around here, September, we had the weekend. So let's just go September 4th, Labor Day weekend, that's right. As you guys can see, it has been dropping pretty drastically at this point. And the news has been pretty negative. It's mostly been very affected against the tech sector. The Dow is very heavy in tech, and the tech is just getting hit right now. I got Tesla over here. I'm going to talk about Tesla in a little bit. Tesla got hit pretty hard as well. And if we go over here on the S&P 500, it was down 2.78% or 95 points. Same thing, if you go back and you check the 5 days, it basically had a decline. And at this point, I'm predicting we're probably going to have a crazy September. Things are going to probably be more of a correction phase. We're kind of in the phase of a bear market. I'm predicting. We shall see. But yeah, here you go. Tesla falls 21%. Worst single day loss in its history. Now, as I had mentioned to you guys on Twitter, I had a very healthy discussion with someone today. I mentioned how Tesla was falling and to keep an eye on it, and someone said, oh, it's normal, Tesla is very volatile. And that's true. Tesla is very volatile. I have a chart here and I'll show you guys. It's very volatile. However, a 21% drop in one day, even for Tesla, is kind of crazy. And as you can see here, the worst single day loss in history. Something to keep in mind. Now let's continue on here. Dow Jones futures stock market sell-off worsens as Apple, Microsoft, Tesla dive, Slack plunges 16% on earnings. Let's go over the main facts just so you guys know what is going on. The Dow Jones futures fell 300 points before erasing losses late Tuesday, while S&P 500 futures and NASDAQ 100 futures turned higher. Dow Jones leader Apple and Microsoft stumbled, while Tesla dove 21%. Nikola, however, which is a competitor to Tesla, soared as much as 53%. Talk about volatility, that's very high volatility. I am not invested in Nikola at all. Before we begin, disclaimer, I am invested in Apple. Microsoft, I sold out a while back. And Tesla, I have a very small stake. I'm debating what I'm going to do with Tesla going forward. Tesla, fun fact, is the only stock I hold that does not pay dividends. So yeah, I kind of took the chance on Tesla. Depending on how you look at it, it's not really a chance because Tesla is pretty reliable. Depending on how you look at it, but again, that's a whole another video. Just give you guys a quick preview. The tech-heavy NASDAQ sold off 4.1% on Tuesday. S&P 500 declined 2.8%, while the Dow Industrial Average lost 2.25% or 632 points. Weighted down by a 5.8% fall in shares of Boeing. Another unfortunate disclaimer, guys. I do own Boeing stock, and at the time I thought Boeing was doing okay, and it was doing okay, but it's been crashing and burning for me. So I'm not putting a single penny into Boeing at this point. They suspended dividends. They look like they're going to have some time before they get back to where they once were, if they ever do. We'll have to wait and see. But yeah, my strategy with Boeing, I ain't touching it. I'm leaving it, and no more investing in Boeing at the moment. Among stock market leaders, Apple, Microsoft lost 6.7% and 5.4% respectively. Tesla plunged 21%. Nikola, like we had said, has gone up. And also, interesting enough, General Motors also was in the green. And I don't own Nikola or General Motors, just not for me. Stocks near buy zones are Netflix. Yeah, Netflix, the stock's been doing really well, but they don't pay dividends. Therefore, I am not going anywhere near it. Lululemon, a clothing company for those who are not aware, did slide about 6% as well. Meanwhile, Slack plunged 16%. Now, all this is going to depend also on the potential cure, I should say, for the bug situation. A lot going on with that, and it's just hard to keep track of what's going on. And they kind of give you guys a breakdown. This is from investors.com. If you guys want more information on the stocks and how they're doing and some more insight, you can go through this all on your own. But we got to keep this quick and to the point. So let's keep going on. Stocks sync at close. This is going to be from CNBC. Stock plunges, tech rout pushes, NASDAQ into correction, Dow drops 600 points, Tesla, worst day ever. Yeah, so that person who was telling me that a slip is normal for Tesla, 20% is not normal, guys. Okay? 5 hours ago. Today's sell-off by the numbers. Here we go, guys. Beautiful. This is what I like. I like the numbers. I'm a simple guy. I like numbers. Now let's continue on. The NASDAQ composite closed down 4.1% for its third straight day of losses. First time since August 11th. And tomorrow I'm predicting will be the fourth straight day of losses. NASDAQ is 10.03% below its closing record of 12,056 from September 2nd. NASDAQ is up 63.58% from its 52-week low. So basically, it just gives you a breakdown of the S&P 500 and the NASDAQ. Dow closed down 2.25% for its third straight negative day. Dow is down, here we go, 3.64% year to date. Apple suffers, Tesla plunges, NASDAQ closes in correction territory. U.S. economy may boom in 2021 like following World War II, someone says. Morgan Housel, whoever that is. Let's continue on here. This is from NPR, which is a more left-leaning network. Tech stocks are in a mood, and they're dragging the market down with them. Dow Jones slumped about 632 points, or 2.25%. S&P fell 2.8%. All right, let's continue on here. Let's see what else we got. Just a little bit of the froth has gone below the market. It's just taking prices back to a level that is more sustainable and more realistic given the fundamental outlook that currently exists in the economy. Yeah, I think most people would say stocks were pretty expensive. We were kind of in a bubble, and it was a matter of time before we're in correction territory. That's pretty safe to say. These few companies have risen so much in value this year that they represent more than 20% of the S&P 500. A decade ago, they made up just 6%. Let's continue on. What else we got here? Let's see. The market also hit hard as oil prices slumped. Yeah, oil prices are still struggling. Strategy for me, I'm not really touching oil too much right now. It's high volatility. I don't know what's going to happen with this whole situation with the bug. Yeah, oil, I'm not really touching. I'm just leaving my little stake I had for now. The decline sent shares of energy companies such as Valero Energy lower. Valero is a company I was looking at a while back, but I'm not touching energy at this point in time. NASDAQ and S&P 500 are still in positive territory for the year, despite the falls over the last 3 trading sessions. S&P 500 index has fallen nearly 7% since the end of trading Wednesday. So we can confirm we are in correction territory. Dogs of the Dow. This is a good website I like to use as well. The following table lists the 50 biggest stock losers today. This is nice. It's actually pretty accurate, and it updates ASAP, so you'll be able to know what is going down. As you can see, there's a whole list of companies. Again, I'm not going to go through all this stuff, but these are tools you guys can use to do your own research and make your financial decisions. All right, let's zoom in on this a little bit. This is from Forbes. Researchers examined the 2020 market crash. Here's what they found. Okay, let's see what these guys found. They did the research, so we don't have to. Sector trends. The biggest loser was oil. Yeah, oil's been getting destroyed. Where the demand disruption due to the bug coincided with a price war. However, real estate, hospitality, and entertainment were also hard hit. Yeah, real estate, hospitality, entertainment, those are definitely good sectors in a normal market, but there's going to be high volatility with those as well. I'm not really touching real estate too much. There's only a couple of real estate holdings I enjoy, and I'm going to be going a little bit more hard on those in terms of investing, but entertainment, hospitality, not too much. The better performing sectors saw absolute gains even as the market fell. These include natural gas, food, healthcare, and software. I mean, let me ask you guys this. When was the last time you drove by a McDonald's and when there wasn't a line? Every time I drive by McDonald's, it seems like there's people waiting, and especially with this new Travis Scott burger thing. Oh my God, that's marketing genius, guys. If you want to learn how to do marketing, forget your university, guys. Just drive by McDonald's and look at that Travis Scott menu. Look at all this publicity it's been getting. People are just driving by, posting videos of getting the meal, and it's just basically a quarter pounder with bacon, with fries, and a Sprite. That's basically all it is. But it's marketing genius, guys. You gotta love it. All right, my bad. I got distracted. Okay, back on track. And different countries are struggling as well. Evolution of the bug and how countries react to it. I also read that some countries might have lockdown 2.0. That could possibly happen. That's a whole another topic for another time, but something to keep in mind. The stock market plunged in. Just take out tech stocks. Yeah, very important. Tech was not the only industry that was hit. Energy select sector, Spider falling almost 4%. There's a lot happening in the oil market to keep investors on their toes. Yep, oil is getting destroyed as you'd expect. Energy stocks felt the pain. Majors like Chevron and Royal Dutch were almost down 4%. Yeah, guys, it's a tough time right now. You gotta be able to stomach the losses a little bit. Quick disclaimer: I do own Chevron and Royal Dutch Shell. All right, let's continue on here. Small exploration and production companies. The news was much worse. Apache was down almost 11%, and Diamondback Energy and Continental Resource were off 10%. Companies I haven't owned, haven't gotten into, and don't plan on getting into them. Chevron, Royal Dutch Shell, those are the main leaders in their industry. Those are companies I got into. Okay, let's continue on here. South Africa. So this is what I was talking about, guys. Markets Insider. This is a great tool to get more information. South Africa's GDP plunges over 50% as the bug punch in the gut triggers the steepest decline since 1960. That's rough. 50% decline. The economy. We think the economy in the U.S. is struggling. Well, South Africa got hit a lot worse than we did. And this might be a trend globally. Other countries might be getting hit hard as well. As time goes on, we'll have to wait and see. Now, here's some of the key points, though. South Africa's gross domestic product contracted by an annualized 51% in the second quarter of 2020, its fourth consecutive economic decline recorded. Construction, manufacturing, and mining were some of the worst affected sectors, while agriculture was the only industry that expanded in the second quarter. The economy's significant contraction, was worse than the central bank's 40% contraction and sharply contrast with 6.1% slowdown. Yeah, so this could be something that, give it a couple of months, we might be seeing more countries globally struggling. The South African rand traded over 1% weaker against the dollar on Tuesday, and that's their currency. I guess it's called the rand. So yeah, there you have it, guys. South Africa is struggling, even though they're not a huge economic player. Like I said, it could be one potential domino for other dominoes to hit. Now, like I was telling you guys, Markets Insider is a site that I enjoy. They give you good information, and I check this maybe once a day, maybe once every couple days. I just want to know who are the biggest movers for the Dow, and it tells me right here. As you guys can see, Walt Disney. I sold Walt Disney, guys. Do I regret selling Walt Disney? No, I do not. Why? Because they cut their dividend, and there's a lot of uncertainty with that industry. So I sold them. I'm confident with it. We're good. But like I said, there's a whole bunch you can go through, and also if you scroll down, the top losers, as you guys can see, the top losers are here as well, and a lot of companies got hit pretty hard, as you guys can see. 4%, 3%, 5%, 6%, Apple, Boeing, guys. I like Boeing a lot. Why they gotta do this to me? And then we continue on here. S&P 500. We'll just leave it with the Dow for now. Didn't load. Let's move on. Now, I'm going to finish it off with this, guys. There's a couple things I wanted to warn you guys about. So just because a company is big and successful, you still got to keep an eye on it and do your research. Look at Nokia. Do you guys remember in the late to mid 90s and early 2000s, what was the most popular cell phone brand, even home telephone brand, really? Nokia. Look at this. They were crushing it. At one point, it was $50-something a share, 50-something, 40-something, pretty consistent. And then as you guys can see, it dipped, and then it maintained, and then now it's been pretty stagnant for about 10 years now. It's been less than $10 a share. So that's pretty rough. Now, do I own Nokia? No. Am I going to own them? No. just based off of this. Look at this. This is not a. I don't like this type of chart, guys. I want to see steady growth, even if it's slow growth. I want steady growth and good dividend paying and dividends raised over time. Very simple guy, very simple strategy. Now let's take a look at Tesla, guys. Now keep in mind, obviously the stock split, so the prices are not going to reflect accurately at $50, $40. The stock split, but they had a huge drop today, 21%. Again, something to keep an eye on. Like I said, I'm kind of torn with Tesla with what I'm going to do with them going forward. They are the only company that does not pay a dividend that I own, but this guy's a genius. Elon Musk, the man's a genius. There's no way around it. Tesla falls 21%. 21% worst single day loss in its history. Okay, so here's the thing, guys. Okay, good. I'm going to give you guys a golden nugget here. If you stayed this long, this is bonus tips. Now, did Tesla fall because it didn't hit earnings, or because there was negative sentiment or some malfunctioning or problem with sales? No. The reason why Tesla fell today was because of this. S&P 500 Index Committee added Etsy, Teradyne, and Catalent to the index on Friday, but stopped short of including Tesla. So there you go, guys. Tesla was not included on the S&P 500 yet. Some investors had expected Tesla to be included this quarter, after it reopened its fourth consecutive quarter of profitability in July. So that's very important, guys. Just because a stock falls by a lot of points, it doesn't mean that it's because of negative sentiment. It could be something like this, even though fundamentally the company might be moving in the right direction. Something to keep in mind. Even though it was down 21%, Tesla, they stumbled on Tuesday after Elon Musk electric vehicle maker was left out of the S&P 500 by the committee that decides on new additions to the index. So there you have it. That's what happened. They were left out of the index. But like I said, Tesla is going to do pretty well. They had their stock split. And like I said, I'm really stuck with Tesla. I don't know if I want to add more, if I'm going to hold off. I'm stuck in the middle of Tesla, guys. What would you do? Let me know in the comments below. Give me your strategy with Tesla. What are you guys thinking with Tesla? Are you investing? Are you holding off? Are you selling? I'd like to know in the comments below. Now also, last thing too with Kodak. So for those of you who are saying you can time the market, this is all I gotta show you guys. This graph of Kodak. You tell me how you could perfectly time from 2013 to 2021 when this stock was going to skyrocket for the couple days that it skyrocketed. Go ahead. Like I said, the comments are wide open, guys. If someone can tell me how they could have timed this, I'll be more than happy to hear it in the comments below. Like I said, of course somebody knew. Obviously people within who knew that there's going to be a deal that was going to get passed, they probably figured, okay, the stock is going to go crazy. But for how long? Did they just buy it for a day and sell as well? I don't know. I couldn't tell you. But that's kind of something to keep in mind as well, is you cannot time the market, guys. Even the best investors, go look up Peter Lynch, Warren Buffett, all those guys. They'll tell you the same thing. You cannot time the market. Look at this. What would be the chances of you guessing the right date that this thing was going to skyrocket? Very, very slim. And even, let's say this, guys. Let's say you planned it right and you knew the perfect date and you invested like right here when it was $2 and then it went up to like $30. Okay, that would have been some nice gains. But how would you have known to sell it a day or two later? What if this thing would have skyrocketed? If it would have dropped, how much it would have dropped, right? So that's a very, very, very high risk. I'd even say that's a gamble if you're doing that. Hopefully no one here is doing that. That's very, very risky. All right, guys, I think I'm good for now. I could keep going, but you guys have an idea of what happened. Today was a third consecutive trading day that the markets were down. I'm going to keep an eye tomorrow. Luckily for me, guys, I got no 9 to 5. Very, very happy. With the Labor Day weekend thing, I had to take an extra day off, so I didn't mind. Extra day off for me. I can watch the markets, and I will be very, very, very active on Twitter, updating you guys throughout the day with what's going down. In case you guys are at work, you're at school, you're busy, I'll give you guys updates. Just make sure you follow me on Twitter. Alright, guys, that's Community Science video. As always, if you're not subscribed, don't subscribe. And if you like the video, give me a like. Until next time, peace.